Hi everyone, this is Arpad from Starpath Academy, and today I will continue talking about the current situation of the economy, rentals and precious metals, and all of that fun stuff. So there's a couple of comments on my buymeacoffee.com/Starpath Academy account, and I want to share some of those thoughts with the YouTube audience, but then I'll do the video for members only because these comments were posted for members only original post, and I want to keep that private because it's their questions. Okay, however, I do want to read a couple of ideas from here. I change it up a little bit, but the basic ideas would be the same. So one commenter asks that do I think rental real estate is still a good way to go, because in his idea it's definitely not something he's planning to acquire now. So he would more likely be holding on to some of these investment properties. And of course, I don't give investment advice. I don't know your situation, I don't know your plan, and I'm not an investment advisor. But I want to clarify the reason, or one of the reasons, that why I make or still make videos about investment properties is because, well, one, I do have some, and I want to clear my plans with the rest of you, right? But I also have made videos about rental properties prior, and I want to make sure that you understand what are some of my steps in order to be proactive in protecting them through a financial crash, right? That could be occurring, or it could be financially crashing upwards, which we can talk about a little later, right? Because I was talking about it, right? And even last year, and I had some guests on, and we talked about how inflation destroys debt in certain ways. When you have a long-term fixed debt, right? The value of that gets destroyed. But some other things happen because the discretionary spending of people is being eaten up by inflation, and that first hits the the spending that you can live without, right? You're not gonna immediately change your living standard when it comes to housing. However, eventually it might eat into that as well, and people can be doing the downsizing or moving out to the country or something like that. So I do kind of think that there will be major changes, but most likely I'm thinking it will be in big cities, and I'm not into big cities at all, as you probably guessed from my previous shows. So I'll do some numbers videos on, like, give you a couple of examples, but just want to clarify the reason, or one of the reasons why I'm making it, is to clarify to you that I am making proactive steps in order to try to defend these properties from a potential crash, right? And I'm thinking about a 1 year, 2 year short-term deflationary crash, right? That is sort of what I'm thinking about, in which case you do have to defend your property, because your renters might not be able to hold up your mortgage, right? And I made it clear in many videos, right? We did eventually acquire a rental property during the hyperinflation of Romania, right? My father did, and we had that paid off completely. And even then, the rent that we collected was barely enough for taxes and I guess some other stuff. And of course, we didn't have any management companies or anything like that. We managed it and we fixed up stuff. And it was just kind of holding on to the property. But and I did some calculations way back, and I do remember some numbers, and just to make it relative, right? The rent that if we would have convert the same amount of purchasing power back into current day dollars, for one of the 2-bedroom apartments, right? That one that we collected, which was the smallest one that we collected, the purchasing power of the rent that we collected in current day purchasing power would be around $50 to $80, right? So per month, right? So around $50. And of course that was X amount of thousands of Romanian lei, if not tens of thousands of Romanian lei, right, in that time. But compared to sacks of potatoes and how many sacks of potatoes you could buy, I was probably less, maybe just $20 of, well, I have to double check the potato price now, right? And based on, I mean, it grows every day, so who knows? But anyway, maybe it's falling, who knows? Yeah, so that is the relative amount that sort of I'm expecting, right? But again, it was crashing upwards. So regarding crashing upwards, I do want to say that in the way I kind of want you to think about that, crashing upwards means that it's actually going up in price. The house is going up in price. The taxes are going up in price. The rental is going up in price. However, it's actually crashing relative to other stuff, right? Like food prices, like even it could be even wages, which is maybe just about the same as wages, but it could be some other stuff. So technically it's crashing. It's crashing to the ceiling, right? That's a good way to think about it. But it's actually being destroyed by crashing upwards into the ceiling, right? And yes, you may actually own that property free and clear, because the amount that you will still own in the hyperinflation will be so minuscule that you'll pay it off with a couple of sacks of potatoes, and hyperinflation then still continues, and the rent will be in the thousands, if not tens of thousands per month, right? But that still doesn't buy you maybe a bag of rice, right? So that way you have to think about. But again, taxes are X%, and that could be rising. But if it's calculated from the price of the rental, which is crashing upwards, then taxes are crashing upwards again. So it's going to be tricky. I'm going to go into more detail about taxes and what we experience, and eventually why we didn't even bother, or the country didn't even bother too much about it. But really, you have to understand everything is relative. You value it based on the circumstance and based on the context that you are in. And in a completely crashed country, the value system will be messed up. Actually, that was normal for me, so the current value system is messed up for me. But compared to, I guess, from your perspective, it will look messed up completely. So in some cases, it might be actually easier to acquire rental properties during hyperinflation if you are well prepared for that hyperinflation, or you do the right steps. It might be actually easier to purchase rental real estate during hyperinflation. Of course, not giving advice here, but that was our case, right? And that is because even though inflation is picking up and pushing up the house prices, it's pushing up food prices more, right? And it's pushing up other prices more. So relative, and this is what the commenter does as well. And I completely agree to that. And I will do a separate answer for you. So thank you for the comment, by the way. So relative to other stuff, actually housing, right, and house prices don't go up that much, right? But the play in inflation here is that if you can't survive through the short deflationary crashes, then you win basically by eating by inflation eating away your debt. However, because you need to plan for that, or I need to plan for that 1 year, 2 year deflationary crash, the minimum should be that I have 1 year full, 1 year worth of allocated cash, and that's cash, not gold, not silver, not nothing, but the actual currency that you have to pay for paying your mortgage and the taxes. And taxes will get harder and harder, right? And just to tell you the example of what happened with our rental property during that time was that we had the property completely paid off, right? And that property, whatever income it generated during hyperinflation, it was barely enough for taxes, right? So in our case, it was more for acquiring, hoping that hyperinflation ends eventually, right? And in that time afterwards, the speed of increase in the prices in the new currency of the apartments will pick up again, right? And food prices will fall back in inflation in the new currency. So now you can see that, okay, if you have a 25% down payment plus a 1 year minimum or a 2 year minimum cash put away for basically emergency savings for that property in order to be able to protect that property, now you can see it's no longer that nice return on investment, because it's almost like double the money, right? So if you had a return on investment on an investment property of 10%, 15%, whatever, now it's getting back to half of that, right? And maybe 7% or 5%, or based on your market, it might be even less. And you're taking up a lot of risk. In high inflationary scenarios, you could be, well, I'm not giving stock advice or anything like that, but you know that commodities definitely are increasing in price much faster than 5%, right? So it's more for a diversified portfolio, but at least they are tangible assets, right? But not as easy to keep as maybe gold in the Carpathian Mountains buried somewhere through very hard times, right? So just wanted to put that out, right? And I do want to answer another question here, which will be about a different thing, not quite inflation, but more of a, I guess, human recognition of the current situation and what I feel. So I will read that question, and the question goes: so in desperation, a commenter decided to check the post for clues for the second part. And yes, if you have missed the post, I guess, on Buy Me a Coffee, actually part 2 of the rental video is in the same post. So go back there and you'll see the second part of the video. Right, but the question goes, he was looking at some Wall Street types of videos and thinking about what would their ideas be about gold and hyperinflation. And from my perspective, what is the Wall Street attitude to financial and social situation that we're going through? How do you think that they would respond to my videos? So it's quite interesting, right? I don't have too many Wall Street friends, but I do have actually economist friends and quite close friends who went to the Wharton School of Finance, right? And interestingly, the person is also from Romania with a very, very similar background to me, with one exception, that my family was dirt poor and there were not, right? Actually, thank God for them, I guess. They were doing quite well on any situation. I'm not sure how or why, but that seemed to be the case, at least from my perspective. And we never really argued about anything, but that was my kind of opinion, that they were doing well and good for them. But their perspective, because of that, is completely different. So we cannot even talk about gold and hyperinflation. When I even mentioned gold and silver, I think it was at least about 7 years ago at minimum, I was not even, like, it never even registered on the scale. Why am I talking about this relic, right? Even though if the person would just go back to the family history, then they would know, right? And that was, of course, 7 years ago. The situation has changed, but it looks like the perception hasn't really changed. They still look at numbers and tweaking the big economic machine, pulling one lever or two, and it's all a mathematical equation for them, right? And as long as they, in their head, they can figure out the mathematical equation, it will work, right? And that's true to some degree, right? Incentives do work, we know that, right? We calculate that, so I do, right? Even just with real estate, I was saying that, okay, now that you have to have that huge down payment for a rental property, investment property, and also the savings that you have to have with that for 24 months ahead of time, with the current inflation, with the current return on investment, it's not the best that I could come up with, best investment, right? So it does work, right? Numbers does work. However, what they fail to understand is that actually most people are emotional, right? And yes, they might not drive the market as much as the big gurus and who are the big, right, managers of money on Wall Street, and that's how they think. They are more analytical and more numbers based, and that's what they think about the rest of us, right? All of us, that's how we work, right? But there's some lag in the market, and by the time you pull the lever up, there's some time, some reaction time, and then you need to pull it back a little bit, and eventually you get to the point where the lever doesn't work that well, because the confidence and the human perception has changed, right? And that is what's harder to track. So now they actually track, right? Well, of course, you always had the consumer index and confidence index and that sort of stuff. But now my guess is that they are mining data through Twitter and through other clusters as well of what the average people are thinking. Like, think about that. That's definitely going on in politics. You think economic decisions are not made by that. I'm not saying they're going to change course in implementing the global dream that they have, right? However, the speed of the dream might change based on how much pushback they get. Now, that's of course for the managers of the economy, right? The average Wall Street folk are actually really living in their bubble of numbers and economists and economist books and so on. I do follow some on YouTube as well, and some are kind of awake to the situation, but they're really not thinking about the people who are who are thinking about how many chickens they will buy this week, right? And that's actually a lot of, like, that's a big part of the economy, right? There's different groups of people, right? And we all act differently, and it's very hard. I don't even know why they think they can figure all of this out, but that's their goal, to have a better model to churn out more profit, right? And push the motors of the economy forward. What I have found is that they will be disconnected probably the most and until the very last point, and because they have been I want to say indoctrinated, but not necessarily indoctrinated, but think about they have been pulled in by their own ideologies of what is their purpose in the economy and how important that purpose is, and they want they live in their own bubble, to be honest. I mean, if you went to Wall Street, and I have, right, and just spend a couple of days between those streets and the people there, and you'll see you'll see the absolute difference, right? Now it's fun to be there, to be honest, but to some degree, but it's really not for me. So I think they will be one of the last ones, because I think the managers of the economy, the way above, right, the Davos people, they exactly know. They have much more input on the world, right? They have the data mines, they have everything, and they boil it down to precision, right? However, the Wall Street people are really just mid-management. They are mid-management, and they are the ones that will be stuck the most in the loop, because think about it. Do you think a Wall Street person will go and start raising chicken or something like that? They cannot. That means that it's a big shift for them. It's not a big shift for me, but for them it's a world already. If he has to go and do that, the world has already fallen apart, right? So I think they will be oblivious to the very last. Eventually they will wake up for precious metals, but it will be more just of the same, buying paper metals or screen metals, numbers on the screen. And I can tell you this, in my opinion, we are going to see huge differences, big differences, the ones you have not seen it before ever in your lifetime, at least. Well, if you're in the United States, if you lived in Romania, then yes, but you will see, in my opinion, you will see huge difference between the paper price of precious metals and the actual street price of metals, right? But that will fall across multiple sectors of the economy. I know you're most interested in that, and the question was kind of around that, so that's why I started with that. But it will be the same when it comes to the grains. It will come to other parts of the economy and every commodity. My guess is that we will have that, and the market indicators will be broken, because at least you most likely have lived in a world where this has always worked, right? And the price of bacon is the price of bacon on the market, right? And that's how you can leverage against price rises and so on. And that has worked, and to be honest, I have done as well, right? I do own corn ETF, wheat ETF, soy ETF, and so on, but that doesn't feed the family, right? I do have to think about how I am going to have actual corn and actual soy. Well, not really soy, but you get the idea, right? Wheat and so on and so forth. But in their mentality, that the Wall Street people, it's very hard to even comprehend the world where this is not true, right? Where the gold price is one thing, but you go and try to find a gold eagle, 1 ounce eagle, and there's none on the market. I mean, okay, well, you go and buy something else, and then you find that the premium is silver. Well, I haven't even looked, but at least 30% or so. I mean, that's huge. I mean, try to find another market that would work like that, right? Or if it's not 30%, then okay, we'll ship it to you in 6 months, right? I mean, it's gonna go there, my guess is. And okay, well, especially internationally, if they need to ship it to Europe, for me, then it will be huge differences, right? in time at least. So think about any other market. Would that work? Would that work for if you would have to order, let's say, corn or something like that to feed as feed? You know, would that work if you had to order anything like that? I mean, I guess if you're a farmer and you have this huge cycles like the yearly cycle and how many times you do crop and so on and so forth, then okay, that's how it works. But for the average people, you go on Amazon and you buy something in 2 days and it's there, right? And the drones will be bringing it in, right? Or at least someone dressed like a drone. Yeah. In the brave new world. So they don't know the difference between reality and screen reality, right? And that will have to break eventually for changes to happen. So for major changes to happen, societal changes to happen, fortunately or unfortunately, that mental break between what you see that is reality on the screen and what is actually reality has to be broken, because if not, you're really just sleepwalking, and unfortunately many people are, and they will not wake up. We have talked about this. My perception is that a good 70% of people will not wake up. You know, they will eventually wake up when they are hit in the face the very hard way in the grocery store eventually. You know, I hope we don't get there. Hopefully there's something that we can do and turn it back. But it seems to me that the circus is too good. The circus is too good, and kind of ironic. But if you take a look at, and let's not even get to the what have happened in Texas and Boston and that sort of stuff. But how many people do you know? I mean, just out of you know, my audience, what was the last kind of aid that was sent to Ukraine, and what was the deal in that, right? Or how much did the debt of Ukraine, that poor country, had to increase in order to afford all of that goodies that we sent to them? Okay, so but what do you know about Johnny Depp and John? I don't even know. I really didn't follow that, but I guess there was a big scandal, and I guess he won, right? Amber Heard, I think. And do you know which is topic do you know more about, right? So Johnny Depp or the Ukraine crisis. So that's really us, right? My list of followers, and look into your soul and think about what they are trying to push down your throat. Imagine how bad the situation is for the rest of the people who don't even watch the show or listen to this show, right? I actually logged out of YouTube and looked at some other stuff on YouTube, and I was surprised the level of stupidity there is on the YouTube homepage. I was absolutely amazed. I don't know how I didn't even catch that. I was shocked. And yeah, the level of it's almost pornography. I mean, it's crazy. It's these short videos about women talking, well, not even talking, but really making movements to, I guess, sounds that you would call music now. And the text that was over it was hideous. I mean, in the sexual manner, it was horrible. And I would think, like, who's the audience? Like, who's watching this? My God. Anyway, I don't know what to say. We are different, even if we came from the same country. even if we have a very similar background. It's really perception of what were the filters of your immediate family, your family's culture, and your education, and how much you let the outside world influence your vision filter, I guess, or your input filter, and based on that you can have very different results. Whether you are Arpad from Star Path Academy, or a Wall Street person, or an economist studying books. All right, well, that was the show for today. Tune in next time, and be sure to subscribe and like the video. I will be releasing another video about real estate, but most likely for members only. And we'll talk about more of reflections of current events back to the Romanian situation, or I'll just take questions from different questions from the YouTube audience. Thank you very much. That's it. See you next time.